Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Friday, February 21st, and it is going to be an exciting day, I must say. And so I'm going to go over the usual tickers, but I did want to just mention before I get into them that I will be going over towards the end of the video Unity Software ticker symbol U, which went up 30% yesterday, closing the day at $28 a share and is up about 3 more percent, right around $29. So wanted to dive into that. Pretty excited about it. I trimmed some calls that I had yesterday, taking some risk off the table, but holding some as runners. Also have some shares. I like the stock. I think it's a deep value play, and I think that we're just starting to see the beginning of another leg higher. So wanted to dive into that. Also wanted to get into Celsius, ticker symbol CELH. This closed yesterday at a price of $25.53, being down 2%. A couple days ago, I did put out a video going over why the volume behind this move made me think it would be going higher. And right now in the pre-market, really in the after hours yesterday, we saw price go up over 30%. It looks like it's right around 35% right now at $34 a share, right around this line here. So wanted to dive into that, not only go over the chart, some levels that stand out to me, but also get into some data on unusual whales and really think about max pain, because the last time I checked, max pain was around 2350. So this 21-day moving average right here, the peach line there, you can see it marked there. So if max pain is still notably lower than current price, which is going to be up here if I flip over to the 10-minute time frame, which I'll do a little bit later, that makes me think that we're going to be starting a massive gamma squeeze, and this is just the beginning of it. Whatever the candle looks like today, as long as they don't announce anything that could draw the price to come down. But I think that this is going to be going a lot higher. So anyways, really excited about Celsius, but I'll get into that at the end of the video. I wanted to go over starting the pre-market prep with the UVIX, which is the 2x long VIX futures ETF. This closed yesterday up about 1%, closing the day at a price of $26.47. It did, it's right around the same price. I was going to say it did pull back a little bit, but that was something else I was thinking about. But yeah, so the UVIX did come down to a low of sub $26 a share yesterday. So I did add to my very small position just to hedge for when we see some more volatility, a spike up. I can trim my position or sell it for a 20% profit. So that's kind of my thesis with UVIX. It's not options, so I can just kind of accumulate this as the market goes higher, this goes lower, I accumulate more, and then this breaks higher. And so we could see this purple line that I've drawn here at $25 a share. I think that this could fade lower, but so far it does look like it's potentially holding right around 26. And with that fading lower, I think it could actually break lower to around 2250, which is based on this Fibonacci extension that you can see here. That is the 786. And also, bigger picture, if we do look at this, we can see that the stock price has been trading in this downtrending parallel channel for quite some time. And so to get to the bottom of that, that could actually be coming down to around $20 a share. So I think it is good to be bracing for that. If the stock market continues higher, this is going to go lower. But then whenever we see a correction, this will go higher. So a nice way to hedge. I like it a lot. But anyways, flipping over to the 10-minute time frame, we can see that it did dip down initially yesterday in the early first 20 minutes or so of trading, dipped down to 25.85, but then bounced, getting above this line that I've drawn here at 26.74, right around there, 26.73. That's a 618 retracement, it looks like. And then it did hit a high yesterday of 27.39, right around this blue line, which was a gap that has since been filled. And yeah, we pulled back, consolidated in the after hours and into the pre-market. So yeah, just looking at this, let's just see where that 786 is from, or sorry, that 618 is from. That is this Fibonacci extension. So that is the level that we are let's see, currently trading around just a little bit below. We did wick up to this gap that was formed here, but then was filled. So that is, what we're seeing, but we are below that 618. So maybe we see a dip down to 26, maybe 25 today, or maybe we hold right around 2650. But anyways, let's flip over to the VIX. This is the Market Volatility Index. Can only really trade options with this, as far as I understand. Does not have a pre-market or after hours, just options. And so, I don't really like to trade this just because I never know when we're going to see a spike in the volatility. That's why I like to trade the UVIX. I think it's a nice way to do this with a little bit lower risk because you're not dealing with expirations. So anyways, the VIX closed yesterday at a price of $15.66, being up about 2.5% on the day, as you can see here. And we are, it looks like, trading above the 200-day moving average, which is at a price of $15.49, so just a little bit above that. But we will be bumping into, this is the 10-minute time frame, so that would actually be the 2,000-minute moving average. So anyways, I'm just going to scratch that. But what we can see here, looking at this, if I just draw a downtrend from the high that was hit on the 20th, so yesterday, on Thursday, the 20th, that high was around 1663, it looks like. We can just draw this downtrend here, and from the low, let's see, of the 19th, is that that was the low of the 19th, I believe. We can just draw a trend line from there. And so maybe we're forming, a little bit of a wedge here that we might be breaking out of. So we will have to look for that. But anyways, if I flip over to the daily time frame, we probably won't see much of a wedge there. It's kind of a little micro wedge. But yeah, just kind of consolidating over here. I am wondering, we had this kind of light blue uptrending level. We got a couple tests of it before breaking down below it, and then it didn't really act as much over here. But if I do extend this line further into the future, maybe that will be acting as a level of resistance. So what we, could potentially see is maybe we do go a little bit lower, but then maybe we bounce up to this line here, and that could be getting to right around $20 a share. That was the prior highs over here. I do have this alert marked here, so that could be a level that we could potentially be bumping into some resistance at. And on that note, what I like to keep track of with the UVIX is kind of these green and red shaded boxes. They're a little bit arbitrary, but just kind of keeping an eye on what I view as like approximately 2-week periods where it trends lower, and then we get a volatile move to the upside. 2-week window there. And so what we have seen here is kind of this green box here, less than 2 weeks, but we saw these kind of couple spikes. But then we have been, since then, fading lower in this red box. And so I might have to extend this over a little bit, just drag it over here to include today. The market hasn't opened, so we'll have to see where that is at. But yeah, I could see this coming down to around 25 before maybe getting the next move higher, maybe getting up to the, let's see, 50-day moving average around 31.55 or $32, maybe just 30. So, I guess I'll doodle that on here. That is what I would like to see. So maybe next week we start to see something like that, but also maybe not. No idea. Just think it's a nice way to hedge. But anyways, let's look over at the SPY. This is the S&P 500 tracking ETF. Closed yesterday at a price of $610.38, being down about 0.4% on the day, and basically going a little bit higher, about 43 cents in the pre-market. And so what I could see happening with this, as you see from my doodle, is that we might be seeing a little bit of a pullback because we do have this, uptrending level going back to the prior all-time high that was hit on December 6th. And then we did form a new highs, getting up to those levels before getting rejected on January 24th, pulling back. And then we did just recently on Wednesday, it looks like on the 19th, hit a new all-time high of $613.23, with that trend line being there. This prior high I think that we might be seeing a little bit of resistance before we pull back to test this downtrending channel. The light blue line there, I'm just going to make that line a little bit thicker so we can see it better. I could see it pulling back to that, and that also does coincide with this gap that has since been filled but was formed on January 31st. Solid blue line there, solid because it has been filled. So pulling back to that, and then also the steep downtrend here that was notable resistance for a few weeks as we would open on Mondays with a gap down. This was, I believe, I think this was the a DeepSeek scare. And then we went up over the course of the week, bumped into resistance before there was the tariff wars scare. And then, we were kind of expecting that at the beginning of this week, another gap down. We did not see that. We actually saw a breakout, which I actually talked about. I suggested could be happening during these pre-market preps. So pretty cool to see that play out. And so now what I am thinking is we might be seeing a pullback here before, I think we're going to continue to make all-time highs. But it's just people are going long now. They're going to get swept, and then they're going to be like, oh, that's it. I'm going to go short, and then it's going to go higher. So that's kind of my thesis with the S&P 500. Let's look over at the 10-minute time frame, though, just to see the levels that it's been bopping around. So yesterday, during market hours, looks like we opened higher, came lower to around 607.02 before bouncing and then closing a little bit down on the day and then just kind of trending sideways. And I actually think this is pretty interesting because a few days ago, so I think this was on the 18th, was that was Monday, was it? Yes, it was Tuesday because we had President's Day on Monday. But we did see at the end of the day this like really big 10-minute candle right into the close, went up for that candle, 0.29%, but I think it's a lot for the SPY. Then kind of, we faded higher or floated higher. And but then came back some. So yeah, I think it'll be pretty interesting to see where we close the week. And I actually think that we could be closing the week at new all-time highs just because it makes headlines. People on, CNBC, whatever, Fox Business, they will be talking about the S&P 500 at all-time highs, but then maybe we see some volatility and next week and we start to see this pull back. So that's kind of what I'm thinking. That makes sense to me. I like that narrative, and that's what this is all based on. So now looking over at the SPX, this is the S&P 500 index, closed yesterday at a price of $6,117.52. Again, just like the SPY, being down about 0.4%. This does not have pre-market or after-hours trading. It also doesn't have volume, so it's kind of nice why I like to look at the SPY. We can see that as we have been hitting these higher highs, the volume, it has been a little bit elevated here, but relative to the highs here, it has just been kind of trending down. So it does make me think that these moves that we're seeing to test these new all-time highs are fairly weak. So this kind of pullback does make sense to me. But anyways, I think that looking at these numbers, the new all-time highs, I think the best way to look at them, to evaluate them, is by looking at the SPX. We actually did see a divergence, I believe, last week, where the SPX was not making all-time highs, whereas the SPY was. So I just found that kind of interesting. I think that it is nice to compare these, but just like I had drawn with the SPY, I do see potential pullback to test this downtrend that was acting as resistance for multiple weeks with the gaps down, floats up, gap down, float up, and then did not get a gap down, broke higher to new all-time highs. Like I said, I think that we're going to be closing potentially today and new all-time highs, making headlines, and then next week we fade down to this downtrend. Also need to make it thicker, just like I did with the SPY, but this parallel channel, the light blue, love that color, parallel channel coming down to around, $6,040. I could see that, and that does correspond with this previously filled gap that was formed on January 31st. Of course, we did fill that over here, but I just kind of like that confluence of levels there with the top of that channel in light blue, the previously filled gap, as well as that downtrend. So that just makes a lot of sense to me. I like that. And if we do flip over to the 10-minute time frame, we can see that yesterday, let's see, how do we start the day yesterday, the 20th? So we started up here with a little bit of a gap down. I find that pretty interesting. And we did, drop pretty dramatically the first half an hour of trading yesterday before consolidating a little bit and then floating higher and then getting above that magical doodle that I have drawn there, that white line. No significance with that. I'm joking about that. But yeah, let's see if we can get back to 6,128.18, which looks like it was a previous all-time high. Got that 0% Fibonacci retracement. And then if we can get to the previously formed over the past couple of days, all-time highs of $6,147.43. If we flip over here, the high was hit on Wednesday, the 19th. So looking pretty good there, pretty excited about what's going to be happening with this. And I do think that all-time highs close today, next week. Maybe there's some news, maybe not. This pulls back. Maybe it's associated with Fort Knox. There's a little bit of panic around that. I don't know. Excited about that stuff. But anyways, let's flip over to Bitcoin, the gold of the cyber world. I don't know, whatever Michael Saylor says, the cyberspace. This is the property in cyberspace. But yeah, looking like it's right around $99,000 a coin. Does look like it has been following my magic drawing. You'd have to look back in the pre-market preps to see when I drew this. I probably drew it yesterday, to be honest. But maybe not. Maybe, I drew it when we were starting to break out here. I'm not exactly sure. But yeah, I had this downtrend drawn that for multiple days, really, I think like getting into multiple weeks, we were trading below it and or above it, but just hanging around that downtrend until the 19th. It looks like we broke above that and then got a continuation higher. And one thing that I have noticed with Bitcoin, I don't think too many people are talking about it. I know Gareth Soloway hasn't mentioned it from what I've seen. Crypto Rover, I believe, has talked about it. But this red uptrend, I have found this to be, a pretty compelling level. What Gareth has talked about is really, I'm just going to make it a little bit thicker. This purple level here around 92, 93,000. And that we've just been trading in this range from around 92 up to around, 106 or, 100. We've just been consolidating up here. But what we have been doing since about January 13th, the closes for these candles might be a little bit off, looking at this in Webull, so just making sure I make that clear. But from the 13th, we hit this low of, whatever the low was, doesn't really matter, 89,000, right around there. Since then, we have been forming higher lows, and so I think that just looks really good. And so, I think that dips to around 92,000 are nice, but since we've been putting in higher lows, we might not be dipping to 92,000. But I should note too, people like to get, or whales like to shake people out of positions. We could be squeezing up to maybe 92, 93,000, or sorry, not 92, 100 to 103,000, maybe higher, squeeze out some shorts. And then following that, we could then pull back to maybe 92. Maybe we break below this uptrend, which would, I think, be like a fake out breakdown, would scare people out of their positions. Oh my gosh, that red line that Andy has been talking about has broken down. And so, I think that would be a really nice dip buying opportunity over here. And but maybe we could be heading down to some of these levels that I've talked about. But yeah, I like this. I think it's going to be going higher, but I think that we will be seeing a pullback. So do keep that in mind. But yeah, I'm excited about Bitcoin as always. But on that note, one thing that I'm curious to be actually, before I switch over to uranium, I just wanted to point out the 786 from this retracement that I have drawn here. That has served as a pretty nice dip buying level over here, as well as with forming higher lows. That is at 93,500, but I think that a dip buy there would have been around 94,000 because just spreads and all of that. But yeah, that might not be tested again, but if it is, I think it will be a fake out breakdown and a nice dip buying opportunity. So just wanted to put that out there. Anyways, uranium, this is the URA, ticker symbol URA, Global X Uranium ETF, closed yesterday at a price of $27.25, being down about 0.5%. And so, this was an uptrending trend channel, but it just tracks the, average price. And I believe it's one standard deviation. I'm not exactly sure. It might be two. I don't know. I could check, but I don't really care. This was an uptrending trend channel. But now it's a flat horizontal trend channel. I had suggested in this purple line, I was a little too hasty about it. I thought this would be rolling over, coming down to around $25 a share, maybe $24.50. $24.50 would, let's see if I take a step back, coincide with testing uptrending level here, higher lows formed. Also would represent coming down to the 786 here at around 24.51. But if it doesn't come that low, I do also have the 618 here at 26.35. Just going to make this Fibonacci a little bit thicker. Trying to make thicker lines, fewer drawings on the charts, just to be a little bit cleaner with them. But yeah, I mean, I feel like this could be coming down to these levels. Although, you might notice in yellow, I do have this downtrending parallel channel drawn here. 3 pivot points you can see circled there. So, I could see it coming down to that, and then maybe people would think, oh, it's breaking below the 618. It's definitely going to the 786, but actually finding support, let's see, around 25.75, maybe somewhere around there. But I think that maybe it could just form a bear flag and then break lower to test this uptrend. And so I think that'd be a really nice dip buying opportunity. I've got these alerts here at 25 and 24.51, corresponding with like psychological level, whole number, $5, $25 alert there, and then also just corresponding with this 786 at 24.51. Not because I'd want to necessarily buy URA, but then I'd want to look at uranium and or nuclear stocks to maybe establish positions in, maybe swing some calls. I don't really know, but I just see looking at the chart, and also just I think that the U.S. needs to build up its nuclear. I think the U.S. needs to build up uranium. Would definitely be benefiting from that. And so I just think that this is bullish and fundamentally, I think, really good for the country. And so I think that this is just an interesting chart to be looking at, but I don't think it is, at the bottom just yet. So I just wanted to be tracking that, going over these levels, during the pre-market preps. And something, I might just for the sake of cleaning up the chart, we got all those moving averages there, so I don't really need all those lines that I've got. But yeah, we still do have this gap up here at 30.53. I think a lot of people were probably thinking over here on February 7th, February 10th, hey, we're hitting a high of, let's see, 29.70, almost at 30, and then we got this gap. We need to fill that at 30.53. Didn't get there. That was just a little bit of a tease, and I think that this is going lower, like I've said. But yeah, just looking over at the 10-minute time frame, we can see that, really not too exciting. I'm just thinking about this bigger picture on the daily. I want to see this coming down to 25. It's not going to get my attention or my full attention until it gets down there. But anyway, speaking of full attention, some things that have grabbed my attention for the past few months and, really Unity Software. I've been following this since I believe June when I put out my first video on it based on a request from Ticker Request Live, which I try to do every Sunday at 9 p.m. Eastern. A lot of fun. Encourage you to check that out if you have not. But yeah, Unity Software got this really nice move yesterday, going up over 30%. I'm wondering if this is going to continue or if it's going to be pulling back. I am still holding some calls. I did trim some at 100% profit yesterday. Pretty proud about that. But with following Unity, I had basically $20 a share marked, but I averaged into those calls. I was not patient enough. I should have had more trust in my technical analysis and just better understanding of the unusual whales data. I could have made more than 100% on that swing, but it's part of the learning process. And so what I wanted to do here is just kind of go over what I have drawn with this, and maybe get rid of some of the lines that I have fallen in love with as I have drawn this chart. And one of those things that, really kind of first put Unity Software on my radar was this downtrend that we had been in since going back to, I think, 2022, May of 2022, been consolidating, just downtrending. And then I started to cover it around here, I think going back to June of 2024, trying to identify a bottom. And there were a number of signals that suggested bullish patterns were being formed. And so I just kind of wanted to break those down, what looked significant to me. But I think that it's probably about time that I say goodbye to this parallel downtrend, as well, the downtrending channel as well as the parallel channel, because I think I could probably just draw a trend line up here, and that might be what might serve as a nice target for us. And so I'm just going to do actually array, so I get the pivot points from over here, these highs. And so I'm actually just going to make sure that these are lined up with those highs. That was 50.08 there, and over here the high was 58.63. So just going to make sure those are the right levels there. Lock that in place so it doesn't budge, and then take a step back and just kind of consider that as, a potential target for where we're going, maybe around 33, maybe up to 40. But I think that downtrend, and I could actually pull it down a little bit tighter. Maybe I actually want to do that. Maybe I want to do it with the close for the 19th, or, yeah, but I'm just curious if that would intersect with the high over here. That would just make me feel like it's a little bit more valid. So anyways, the close over here was 48.50, so I might just adjust that over here to 48.50. No closes above that downtrend. Yeah, and so, and I could actually, I could adjust this. It's pretty close. The high over here was 58.63, but the close was 58.47, so effectively the same. So yeah, I think that's a really nice downtrend to be keeping an eye on as resistance. And also, we got rejected from that level right here, so I think it's just a beautiful technical level for us to be looking at. And so one of the things that really stands out to me, 43.65, I think that this could be the neckline of a pretty massive inverse head and shoulders pattern. We're currently in the head, have not formed it yet, but I kind of have that doodled out here in the light blue that I think that we could be going up there, whether that's on this run or maybe we bump into some resistance right around 30. So that's a little bit above our heads. That actually makes me feel a little bit concerned that this could be pulling back. So maybe I want to offload more of my calls today, but still holding the shares, and I just want to have a plan to buy back. But I also wanted to look at some of these previous moves that we had seen in the past. What percentage moves did we see following the bottoms and following the pullbacks? Because I just kind of want to get an idea of where Unity could be going, currently at $28 a share. And so looking at this, I was just trying to figure out different ways. How could we potentially be finding a bottom? I didn't call the bottom here by any means, and I personally didn't start to realize this is a deep value play until basically December or so, when I started doing let's see, what am I calling them? Highly regarded options theses. I did those for about 3 months, really just learning more about unusual whales. It wasn't until I started doing that that I realized that Unity software is a deep value play, and that's when I started to go longer, but I should have been more patient waiting for this pullback here. But anyways, I, was tracking it over here, not really understanding what I was looking at, but I had noticed this purple line. I tend to like to make purple lines associated with head and shoulders patterns, just because purple is a fun color. And yes, we see this, left shoulder here, head over here, and then right shoulder here. Got a super nice break above that on September 12th, going up almost 10% on the day, and then just continued higher. And so that to me was like, wow. Maybe there's something here, but I didn't really have much to go off with that. And, but, I did have, let's see, double bottom here. What can we see? We saw maybe this is a spring. I'm not really sure. Maybe I do want to leave this level here at 1538. Just thinking like maybe there's a double bottom there, go up to form that left shoulder. Then we get a fake out break spring to then form that head, because you want to have a lower value for that inverse head. And then the shoulder, then going up here, pulling back, and then it's like, well, 1538. I think I wanted to buy at 1538. So yeah, maybe I do want to keep that level here, but I'm not going to make it thicker just because that's a level that people were probably waiting for. I was waiting for, and they got left behind. But then following that, I do have this Fibonacci retracement going up to the high over here. And I just think that this I think is when I realized, wow, there's just so much beauty in this chart with the Fibonacci levels, the patterns, the inverse head and shoulders. This uptrending level, we'll see where we're at relative to that right now. But we pulled back to the golden pocket here. I need to make this retracement thicker just because it's an amazing one. Golden pocket, so that's the 618 down to the 65% retracement. That's around 1750, right around there. And so what you see over here, this pullback, we pulled back to the neckline of that inverse head and shoulders pattern, as well as that golden pocket. Confluence of levels, that was a bottom. That was a beautiful, beautiful dip buying opportunity. And so with that, we did see this big move to the upside. So I want to get some measurements, but I might actually take those measurements once we're looking at current price. So I want to do is just get a measurement from here to here. See how that actually, maybe I'll just do that now. Measurement from here to the top side here. That was a 68%, almost 69% move to the upside, about $10 increase. So that's just a really nice move there. I will then see how that plays out over here in a second. I just don't want to get this to be too cluttered. But then what we see, I've got a few retracements over here. Also, a return to that uptrend. When we got a fake out break below it, just like we got a fake out break below this double bottom over here, we saw a fake out break below this uptrend that had served as notable support, a notable level to be paying attention to in the past with these big moves following that test. And so I just think that this is really, really cool. Anyways, we do have this Fibonacci retracement. This one, however, I don't want to adjust the proportions. I want to adjust the thickness of it. We didn't pull back to the golden pocket, which we did over here. We actually pulled back to the 786. So I think I kind of got a little bit more aggressive with this when it pulled back to, let's just throw it up here for the sake of this discussion. But if I do pull up the 618, or the 65% retracement, that will be the golden pocket. That was around 2150, give or take. We didn't, hold that level. We did bounce from right around there a little bit, actually bouncing off the 200-day moving average, that thin blue line right there. But ultimately, we weren't at this uptrend. And so I should have been a little bit more patient waiting for that 786 retracement to around 1973. Just looks super, super nice there. And then there is this other level that I have drawn there. Let's see, I might have to, that is just 1980. Okay, so that was a gap. That was a gap, so another level. That gap has since been filled. But we can see over here on November 19th, we closed at a price of 1980. So that's why I have that blue line there. You can see it right over here, just below my alert at 20, 1980. The following day on November 20th, we hit a low of 1993. So we left a gap here that needed to be filled. And so just like over here, I wanted to see a confluence of levels to suggest that the bottom was in. And that corresponded with a retest, a fake out break below this uptrend. Beautiful. Also, a fake out break below the 200-day moving average, which we got a test of it over here, then a fake out break below it here. And that also makes me think that we could be doing something similar with GameStop. Recently, basically tested a 200-day moving average. Then we might be seeing this bounce in GameStop, but maybe we see a fake out break below that 200-day moving average like we're seeing in Unity, or like we saw in Unity over here. Also coming down to that 786 from this retracement, filling this gap over here, also creating another gap here. So I just think that's super cool, like how the market likes to play with us. We filled this gap, but then we gapped up, formed another gap here at let's see, what was the close? 1944. So I got that marked right there. So I'm just going to make that a dashed line. And I'm going to make that blue. That is a gap that we have yet to fill. I think we're going to be leaving that behind, because we got this confluence of levels, confluence of support, just like over here, just like I guess we were forming the bottom over here, so not necessarily over there. But yeah, I just think this looks beautiful. I think this is going to be getting up into the 40s later this year, maybe in the coming months. I really don't know. But I wanted to kind of take this measurement and see, okay, that's a 60% move to the upside. Maybe I want to drag this over to the low over here. That was kind of a nice approximation for the top over here, but this was only a 55% move to the upside based on the box. Let's see what this was to the high over here, about 65. So let's say 60%. Let's go from about 69 to 65%. And so now I think maybe, a 65% move, 60% move could be feasible. And so, before I get ahead of myself, let's just move this box over here from that low to see where this could be going. That's about a 60% move. That's what I was talking about. Just kind of breaking this down from 68, 69 to 65, incrementally coming down by about 5%, 59% here. That also corresponds with this downtrending level here. So I think what could happen, and maybe it's not the top, maybe it continues to rally up to 45 or so, 43.65 in the coming months. But what I think could happen, I'm actually going to make this box a little bit thinner so we can start to think about what might happen here. If price does go up there, if it does continue higher, this does make me feel a little bit more confident about holding some calls. But what we could see, in my view, is I'm actually going to take a step back to do this because I need to have the bigger picture here to draw this. But what I could see happening is we move up to this level, but then start to consolidate below it. And then maybe where the cursor is, that goes across to that prior high, that forms a bull flag, and then we get the move up like that. So, that makes some sense to me. And then if I just draw the line across over here, actually I don't need to draw a line across, I can just do a 0% Fibonacci, so that's the high over there, 28.67, low energy, low effort. Yeah, we just get this move up to here. That makes sense, the consistency of these moves. That gives us a little bit more wiggle room to move higher, but then we start to fade, then people start to lose confidence over here. Just like people have lost confidence with Bitcoin and with Ethereum. That's a great opportunity, time to accumulate when things get boring. And then we see a breakout. So yeah, I think this is going to $43.65, $45 a share. And that would then form, basically this left shoulder here, head here, inverse head here, getting up to that level. And then I think maybe over the course of 2026, we see a pullback to what level? Oh my God, it's so beautiful. This white uptrend to form a right shoulder, get back to that neckline. And that would be actually, yeah, so this would be, how I have it drawn. This would be getting up to this level around July. And so maybe at July, we start to see some resistance. And then the second half of the year, it could do something like this. And then 2026, this is how I have it doodled. Take it with a grain of salt. It's just a doodle. This is like the end of January. And then so from that, what I could see, I don't have it drawn up here, but effectively, I'm actually going to just drag this down a little bit so we see more of it. Effectively, what I could see is, the measurement from the base of the head to the neckline, getting it up here, that measurement, so then the same distance from here to that neckline, taking that measure, that distance, replicating it up to here, that would bring price to around $72, $73, maybe $75 a share. And so I think that we could potentially be hitting that in 2026. So I just think that this chart is amazing. I think it's beautiful. But with the move that we have seen recently, I'm thinking that we might be getting into some resistance soon. So as far as the calls that I'm holding, I just want to be a little bit cautious about that. I wanted to keep that in mind. So I really wanted to dive into this for myself. Hopefully that's useful for you guys. And I will also flip over to the 10-minute time so we can just see where we're at. Yeah, maybe we're getting into some resistance with that prior high of 28.67 in the pre-market. Looks like we hit a high of 29.07, but it looks like we're going to be gapping up. And I think that, if we look at the daily, we have this massive surge in volume. So I think this is probably going to be continuing this move. I think that, contrary to my consolidation over here, getting up to around $30, $31 a share, maybe $32 a share. If we look at the volume, I believe that the Bronx Viking was talking about the volume that we saw yesterday, 64.16 million shares traded. I think he said that the last time we hit that high on the daily was, going back pretty far in time. Yeah, I mean, I can't even really, I just adjusted that, the window there. But yeah, it's like this is just like a massive surge in volume. It's historic volume that we're seeing behind this move. So I think this is probably going to be continuing higher. And yeah, this might not play out. But I think something that can inform us on if this is going to continue higher. We closed today at 28. Let's look over at the max pain. And so let's look over that here in the unusual whales data. And actually, before I look into the max pain, or actually before I look into the max pain, just want to look at the data here. So this is the net call and put premium. Massive surge in volume yesterday, not too surprising with the massive surge in the stock price in yellow going higher. We saw net put premium being more or less flat on the day, actually going down by $74,000 net put premium. But what do we see in the net call premium? Going up by $10.46 million. See that green line going up over the course of the day and then also getting a bump towards the end of the day. So looking really good. If we look at the bear bull slider here, 55% on the bull side, clearly in the majority, this is looking bullish. And if we look just over the past 30 days, huge trend change here with the stock price, being kind of flat, fading lower, net call and put premium being kind of flat, nothing too notable, but then a massive change, getting into the double digits, the double million digits, whatever that would be, tens of millions traded yesterday. So yeah, I mean, just looking really nice there. So I am just excited about the data here. But if we do look over at the Greeks here from Unusual Whales, we can look at the max pain. So the max pain for today, believe it or not, it's $23 a share. So I think that there is going to be some effort to pull the stock price lower. But if we're closing, let's see, many strikes above $23, which is the current max pain, I think we're going to be seeing a gamma squeeze with Unity Software, even if it pulls back. If it pulls back to 26 today, let's say, or let's see if, what's a level that this could pull back to following this move. To be honest, I don't think it's going to pull back. I think there's going to be effort to suppress it. Maybe it comes back to the highs over here, around 26, but that's still notably above today's max pain. Next week, the max pain's 25. I think that there's then going to be an effort to try and pull it below 25. Although next week's max pain is probably going to increase as stock price goes higher because people are placing more bullish bets. That's going to increase the max pain. But then the following week, Pi Day, expiration here, 23 is the max pain. March 7th, 2350, 2250, 21 for April 4th. So yeah, these max pains just do not reflect what's going on with the stock price. I think that we're going to be seeing a gamma squeeze with Unity Software. So I feel good about this. I feel good about my calls. Before market opens, I'm probably going to be less aggressive with my trimming. Managing risk is important. I did that yesterday though. And so now I want to have some runners. I think that this just looks amazing. I think this is going to 32, if not potentially by June. That's when my first expiration is. And maybe if you guys are curious, the contracts that I was holding, one that I was looking at was a $25 call, March 21st expiration. But I don't have a position in that. I like to have multiple months between current date and expiration. The ones that I'm holding that I trimmed yesterday is a $42 call with the June expiration. I actually proud of myself here. What was the high yesterday? 113. That was me selling 10 of my contracts. I feel proud about that. Taking some risk off the table at 100% profit. Still holding a few. Also, still holding, I believe, just 2 of the $65 January 16th. So a leap over 300 days between now and expiration calls. So yeah, I mean, those are ones that I'm holding. And, based on what I doodled, I think that by mid-year, by June, July, we could be up around 43. So I think that both of those contracts could still be printing, but I think that only one of those, I think, will be potentially in the money at some point, and that's the $42 call for June, while the January expiration might be a little more conservative. That $65 call, that is based on my bigger picture perspective, following this inverse head and shoulders pattern, which will require a notable pullback. As we see here. So we haven't gotten up to that neckline just yet. But anyways, enough rambling about Unity. I want to dive into Celsius. I made a video about this, so I'm actually going to pull it up. Sorry to self-promote, but I did just very recently put out this video here. Only got 55 views, so that's pretty sad. But maybe I can pull it up here so it's a little bit bigger. I did analysis on Celsius and Wolfspeed volume price analysis, and I basically made the case for that I thought that Wolfspeed might be topping. I was apparently wrong so far with that, but my basically argument was that Celsius looked better. And, it was testing me yesterday after the big move on Wednesday, going up almost 15% with this gap up, forming the gap here. And then on Thursday, forming this inside bar, and with earnings in the after, I was like, I might be making the wrong mistake here, holding my calls. I might be making a mistake. But my analysis with the increased volume, that analysis that I go over in depth here, proved to be correct. I'm very proud of that. And we are now looking at, a gap up. It's up 33% in the pre-market. If I do flip over to the 10-minute time frame, look at that. That looks amazing. Although, good to be paying attention to. Does look like it got rejected from this line that I've drawn here around 36. That's at 35.83. Did hit a high, it looks like in the after hours yesterday, of $36, being a psychological level too, being an even number. And so that level that I had drawn is effectively this uptrend. And so that's based on, it looks like, the open price from November 19th, as well as the closing price from December 30th. We bounced from that level, got a retest bounce, but then a break, consolidation below, forming a bear flag before going lower. And I could probably, let's just do a quick little Fibonacci extension from up here to down here and then up to here. That 1618, it looks like, was a good predictor of the bottom. So pretty cool there. And the 100% was actually, I was thinking that it might be forming. Oh, wait, no, actually. What I want to do, so this, there, and this predicted this move here to that 100%. But then the 1618 actually predicted the bottom there, so that's kind of cool. But then if I do another Fibonacci extension, so from here, same kind of idea, down to the low here, and then up to the high, the 100% there, approximately the 1618 from that initial extension was actually a good predictor of the bottom. And so I might actually just leave up the 1618 because I think that's a pretty cool, want to be finding predictors for levels. We did also see when we got to that level a breakout from this downtrend. So that kind of signaled to me, hey, we've seen something change. Move up, consolidation, bull flag, volume behind, this consolidation here. A gap up, more volume. So I take that back. No volume behind this consolidation. Then the gap up, volume behind that, support behind it. Looking really good. And so kind of what I'm curious about with this is where it could be going. If we look at, I already looked at the 10-minute time frame. But yeah, this is around 34 in the pre-market, around 33% upside. I do have this level over here. Perhaps what I want to do is leave that 1618. That was also, I think, a good kind of approximate predictor for the bottom there. But this level, that was not so great. We formed a bear flag there, broke below. So that was kind of a signal. It was a bear flag. So I'm going to remove the 100% because that was not helpful. But this 0% retracement, so where that retracement started from, I'm going to make that a little bit thicker. And I am going to make that actually, I think, light blue because I like the color. I just think it's very soothing. Cool down. It's going to be okay. Light blue, around 32. We're currently above that, but there might be some resistance there. I do have this other level here, 35.83. I'm an idiot. I just saw the white line. And so I was thinking that was what I saw in the 10-minute time frame, this white line. No, 35.83. I'm an idiot. We gapped up. We're right around here. So I think I'm going to make this line yellow just to distinguish it from this. Confusing myself there. Apologies about that. So that's where we're trading. There could be some resistance there. Also, we do have the 200-day moving average above us, though. That's at 41.80. I think that seems more likely than getting rejected from 36. And the reason for that is going to be because look at this. I mean, we've got this double top here. It's just been suppressed down so much. I was curious to look. What's the, let's see, Celsius short interest percentage of float? It's about 25%. And, if I do look here, what is a good percentage of float shorted? Generally, if short interest exceeds 10% of a company's float, it can be concerning signal. And something that is, what is short? Okay, anyways, that's getting into the weeds. 20%, Google will tell you, is considered to be heavily shorted. So this is heavily shorted with the moves that we're seeing in the stock price getting up to 36 right here. So yeah, maybe I want to, actually I don't want to doodle it because we'll see it. But actually maybe I want to draw a gap here because now we have a gap based on yesterday's close of 25.53. Going to make that a dashed line, make that blue. We got a gap there now. I don't think that's going to get it filled. I think that this uptrend will act as support if we do come down at some point. But I think this is going to be going higher. And the reason for that is because let's flip over to some data here in unusual whales. I actually don't really care to look at this premium, net call premium, because yesterday we did see net call premium go up. It increased by about 620,000, but net put premium increased by about 420,000. I feel bad for those people. And so that's basically just people making bets around earnings, around what we saw in the after hours yesterday. And the net put premium increase, those people, they lost some money. But yeah, I mean, it's just like really indecision here because of earnings. If we take a step back, look at the 30 days, we do see net call premium increasing to over almost $7 million not dollars a share. Net call premium increase, $6.79 million. So that's kind of something that stands out, especially with the stock price being low and going higher. They probably saw the same signals that I was seeing in that video that I went over, that it's looking good. But what I want to look at with unusual whales is actually not the premium. I want to look over at the Greeks. I want to look at the max pain. And so I had previously went over in, this video, I had gone over how the max pain for Celsius was 23. Then it increased to 23.50. Now for today, it's 24. What's the price right now? 34, okay? We're going to see a gamma squeeze with this. I'm holding some calls, and I'm thinking, well, let's see, what calls am I holding? What calls am I holding? If you're curious, and this is not saying I think it's a good time to buy. I think this is a good time to be taking risk off the table. But contracts that I'm holding, one is, I'm actually just going to, so we don't see all of this craziness over here. So this is just the previous day. So the call that I'm holding, $50 call, June 20th expiration. that is making me a little bit nervous. Because I'm learning options. I'm learning trading calls. They can, and this one likely will expire worthless, but I think it could be going a lot higher. $50. I got that marked right here. And, because I got it marked, it's got to go there. It's like a magnet. I'm just kidding. But, I think that 41, 42, 200-day moving average, I think that could be acting as some resistance. But, man, looking at this 24, 25, 25, 24, I think maybe a month from now, we could be pulling back some. But, oh my gosh, 20s, are you kidding? No, shorts are getting squeezed. We're going to see a gamma squeeze. And so, yeah, I think that the calls that I have because of this call, 50, what did it go yesterday? It doesn't look like it was, so no, today it hasn't started trading because the market's not open. But on the 20th, and sorry, I'm just going to leave this banner up here. I think that, actually, no, I can get rid of that because it's past. So the 20th, we saw a high of 55. And so it's like, man, do I want to sell at 55? No, because of this gamma squeeze that we're going to be seeing. And so, yeah, if I just take a step back, look at the past 90 days, this average fills up here. Dang. This is October. I think it's getting a little bit greedy. I was actually thinking around here. This is when, so this is December 12th. So December 12th, I believe, is around here. This is December 13th, 32. We're around there. So I was thinking, premium could be probably getting back to that price, 250, 250. Dang. So that's kind of, where I'm thinking this could be going. So that's from 55. That's a potentially, was that 4, 5x from where we're at? So yeah, I think that looks really good, but also we're getting closer to expiration, so it's risky. I think that this contract will be going to zero ultimately. So just be cautious. And with the gap up that we're going to be seeing today, we're not going to be seeing 55 again for quite some time. So just throwing it out there. I'm not suggesting that anybody buys this. I think that's actually a bad idea. But I'm going to be less aggressive with my trims because of this. The other one that I hold is the $100 call. This is for January 16th, so over 300 days between now and expiration. But the premium yesterday, the high, was 40 cents. If I look back at the data from around the mid-December, that premium was average fill was 129. So I think this could 3x from where it's at, or 2x more. So from 40 cents to around 120 or so. But I think it could be going higher. And looking at the chart, I feel like that's actually a safer call because of the amount of time between now and expiration. And, 100 is getting back to this double top. I think that's feasible in all honesty. But at the same time, Unity, I feel more attached to that company. I feel like there's more, I'm more compelled by it. Celsius, personally, I don't drink energy drinks. I think just the idea of them is disgusting. But people drink them, so why do I care? If you drink them, why do I care? Good for you. If you enjoy them, if people enjoy buying this stuff, I think it's great. Massively shorted, it seems like. Overly so. And yeah, I think this could be going up to 100. So, I think this is a safer play, but there's the volatility now behind it. So I think it's risky. So definitely not suggesting anybody buys these, just saying that I hold these. And one that I have been keeping an eye on is this one. This is the $40 call that expires in July. And you might be wondering why I was following this. It's because of this spike back here. I did kind of dive into this in a video. If you want to, it's not really actually that interesting of a buy, but only got 39 views. This unusual whales chart analysis on the options of Celsius. I like the thumbnail. Anyways, what was I looking at over here? Yeah, that's what I was looking at. It's really not an interesting buy though. So, but that's $18 million behind it. And that was not a sell, even though it looks red, because there was no open interest before it. So if I do scroll down here to December 12th, volume of 38,000, open interest was 168 the day before, 172 that day, 38,000, 18 million. Open interest goes up by about 38,000. That was a buy. And that's since been held. We're now at 39,000 open interest. Went down a little bit yesterday. Sorry for those suckers. Sorry for those suckers. They're going to regret it. But yeah, I mean, that's just to me been like a really, like, there's something here. And yeah, but what I wanted to look at, I think I've already looked at it. The max pain. Yeah, I mean, I think this is going higher. So I'm excited about it. It is 9 a.m. though. I've been streaming for an hour, and I kind of wanted to consolidate this down into a little video on Unity and Celsius before market opens. Wanted to release that. So with that being said, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more great content like this. Thank you so much for watching, and good luck trading Unity, Celsius, and or whatever else you're trading today. Take care, you guys. But I do see a comment from Snap Crackle Pimp. Hey, Ed, just found your channel last night. Glad to be here and follow some stocks with you. Awesome. Thank you so much for the comment. I'm glad you didn't have a request. Hopefully this was a valuable stream for you guys. Definitely valuable for me. I was learning as I was going over this stuff. And yeah, I am going to be trying to, like, I get a lot of requests. Happy to go over them during Ticker Request Live on Sundays. I try to do that every Sunday at 9 p.m. Eastern, but some weeks I might not be able to do it. Or if there's a holiday on Monday, I'll do it Monday at 9 p.m. Eastern. But yeah, I think that that's just a really nice way. Share my perspective. You guys give me some ideas. You know, I give you my perspective on the stocks, the charts. But in all honesty, I feel like a lot of what gets requested is, you know, there's a lot of excitement. There's a lot of momentum behind something, and people go towards that. And by people, really what I mean, unfortunately, not trying to be insulting, sheep go towards that. The crowd, the herd goes towards that. And we don't want to be sheep. We don't even necessarily want to be wolves or sheep herders, but we want to be the shepherd, you know? I'm just kidding. We probably want to be, we probably want to be the shepherd, you know, Pulp Fiction and all that. And so, yeah, I mean, I think that it's really good. You know, when I'm talking about Celsius down here and videos aren't getting views, when I'm talking about Unity down here and they're not getting views, those are actually the most valuable videos, because the sheep go to the ones that get a lot of views. The wolves, the sheepdogs, the shepherds. I guess I'd be the shepherd if I'm making videos. So the wolves and the sheepdogs, I guess the sheepdogs would go to the videos that don't have many views. The videos that have a lot of views, you know, I'm the shepherd, I'm making all of the videos. The sheep go to the videos that get a lot of views. The sheepdogs go to the ones that don't get a lot of views. They get the ones that are high value, not high view. And so those high value, not high view videos are going to be this Wolfspeed Celsius analysis that I did. It's a 30-minute long video. I'm sorry, only 54 views. It's a great video. Let's see. I'm not trying to throw anybody under the bus, but this one, 1.1 thousand views. To be honest, gap down. I'm probably wrong that we're going to get a notable dead cat bounce. We might have already gotten that dead cat bounce. So this could be fading lower. So a lot of views, probably not so great. This one, Unity Software is in the dip, all caps, only 84 views. That was the dip. That was awesome. So yeah, I mean, I'd encourage, you know, if something doesn't have a lot of views, it's because I'm just rambling about analysis, and there's probably a lot of value in it. I could be wrong though. I mean, like with this one, I was wrong because I was saying almost there. It didn't get there. I missed out on Walgreens, but you know, it was pretty nice. Same with Airship. You know, it didn't pull back as much as I had wanted, but you know, there are tons of stocks. Intel, oh my God, the bulls arrived at the party 10 days ago, only 30 views. So yeah, I try to put out good content. I'm trying not to chase. If people request stuff, happy to go over it on Sunday, or if I see something that really stands out in the chart. But I don't want to be pumping stuff that is going to be disappointing, or because I'm more likely to be wrong. I'm more likely to be right when stuff is boring, but things are starting to show signs. And I'm going to try to support my analysis not only with what I see in the charts, also with Max Payne and Unusual Whales data that's helpful for me, and also kind of going over community sentiment, what other people are posting about. The Bronx Viking, Colin Gladman, Volatility, Gareth Soloway, and also Mr. Chart Norris. Those are people that I follow. I think that they do really good analysis. They give me good ideas. But anyways, I'm going to end on that. And Snap, Crackle, Pop, Pimp has another comment. I'm just going to read that before I sign off. I found you because I was curious about wolf speed last night, and you're one of the only people talking about it. Yeah, that's the deep value. And also, you know, I was aware of what was going on, like odd things were going on with GameStop and AMC back in the day, but I wasn't aware of Roaring Kitty until after it happened. But I think this was a point that Colin Gladman made, that people were making fun of Roaring Kitty initially with GameStop. That's how you know it's deep value, because the sheep are laughing. They're buying at you. Who cares? You know, the silent wolf, knows where the deep value is. And so I'm trying to be that, or I'm trying to be the shepherd and identifying the wolves, identifying the sheepdogs, the sheep, and trying to put content together that has deep value, or just has, you know, potential for a nice swing. So yeah, and with your interest in wolf speed, I was wrong in selling my one call on that, but I needed to take some risk off the table. And now that I did that, I, was able to make a nice play with Unity, take some risk off the table. Now I have some more capital on the side to then be, more comfortably maneuvering in and out of positions. And so that's really, what I'm interested in. And I thought that, I'd make money with YouTube and then put that into the market. And I feel like that's the wrong way, actually. I think that from making videos, from going over my analysis, it helps me. It's a trading journal for me. I do better analysis. I hold myself to account because of these videos. I learn from my mistakes because of these videos, so I get better. And then I make money in the market. And then, I just make these videos because they're fun for me. So whether or not they get views, it doesn't really matter to me that much at this point. It matters that I'm excited about the content that I'm producing. And I hope that it's valuable for you guys. And I'm going to be wrong. At this point, probably 50-50. But look for confluence. If I'm talking about anything, if it's just one level, one Fibonacci retracement, there's no confluence. If there are multiple lines, if stuff's getting cluttered, that's what you want to see, and then you can have more conviction. I could have loaded the boat calls here, and I actually got out too soon in some calls that I had. Here, I'm trying not to do that. Could have loaded the boat here. And so the next time we see these kind of pullbacks, I'll be more aggressive with that. And then hopefully, the charts that I go over can not only help in your analysis, your approach to the market, hopefully can help you make money. But none of this is financial advice. But I think most importantly, hopefully my videos can help you manage risk. I think that's the most important thing. It's so tough taking profits because social media, the crowd, the sheep will make you feel bad about that. But nobody ever loses money taking profits. I think it's a really valuable lesson. I took profits too early on Intel. I took profits too early on BlackBerry, but I learned from those lessons and I am applying them to Unity. I'm applying them to Celsius, and I hope this has been valuable for you guys, but I got to get myself ready for market open in about 20 minutes. I hope you have a wonderful day, wonderful weekend. I'll probably put some more videos out today, and I will release clips of Celsius and Unity software before market open, so I got to get going on that. Take care, you guys. Have a wonderful, wonderful day trading Friday. Have a wonderful weekend, and hopefully I'll see you Sunday evening for Ticker Request Live at 9 p.m. Eastern. Take care, you guys. Good luck trading, and make sure you manage that risk. Anyways, take care, you guys.